Welcome to TalkTickers. You're here for the essential insights, so let's get straight to it. Today, we're diving into the latest earnings call from Southwest Gas Holdings, ticker SWX. What's the headline?
Well, the big news is record net income for the first quarter of 2025. A strong start.
Record income, okay. What else stood out in the initial results?
Yeah, so digging a bit deeper, operating and maintenance expenses were actually slightly lower quarter over quarter. And importantly for investors, they reaffirmed their full year 2025 net income guidance.
Keeping the guidance. What was that range again?
Still $255 to $275 million. And they also reported a trailing 12-month return on equity that came in at 8.2%.
8.2% ROE. Okay. Record net income. That's definitely notable. So what was really driving that performance? Was it just simming those O&M costs?
Not just that, although it helps. A really significant factor was positive movement on the regulatory front. They got the final okay for the Great Basin rate case.
Right.
And maybe even more important, they reached what they're calling a constructive decision in Arizona.
Constructive. What does that mean in real terms?
Well, it means a pretty substantial $600 million increase in their authorized rate base.
Wow, $600 million.
Yeah, and that's expected to boost revenue by about $80 million annually. Plus, they got an authorized return on equity of 9.84% there.
Okay, 9.84%. So those regulatory wins, they're directly feeding the bottom line then.
Exactly. They directly support higher revenue and ultimately better profitability.
That Arizona result sounds like a pretty big lever for them. What about California? That's often a key state, right?
It is. Progress is being made there, too. They expect new rates to kick in around January 2026. But it's not quite a done deal. The Public Advocate's Office has recommended a lower revenue increase and a lower ROE than Southwest Gas requested.
Okay. So negotiations still happening.
Right. They filed their rebuttal testimony. Talks are ongoing. If they can't hash out an agreement, there's a hearing set for early June. So movement, yes, but the final financial impact in California is still, up in the air a bit.
Got it. Now, back in Arizona, you mentioned this system integrity mechanism, the SIM. Sounds kind of technical. What's the idea there?
Yeah, the SIM. It's actually quite interesting. It's essentially a capital tracker program.
A tracker for?
Specifically for those non-revenue producing investments. Think safety upgrades, reliability projects, stuff that's essential but doesn't directly bring in more cash. And in Arizona, that's a big chunk, like maybe 40% of their annual infrastructure spending.
Okay, so this SIM would help them recover those costs faster.
That's the idea. A decision on the proposal is expected within about 90 days. If it gets approved, their first filing it could be March 2026, with rates potentially effective April 1st. It could really cut down on that regulatory lag for recouping costs on these, critical safety investments.
So it feels like they're trying to be proactive with the regulators, not just reactive.
Seems that way, yeah. Trying to find mechanisms that work better for these necessary ongoing investments.
Okay, let's shift gears a bit. Strategic priorities. The separation of Century, their other business, that's been talked about for a while now. What's the latest on that?
Right, Century. The commitment to separating it is still very much there. It's a key priority. They're looking at several options. Could be taxable sell downs, maybe share exchanges, or, some kind of mix.
Is a tax-free spin still on the table?
It's still possible, yeah, but only if a taxable deal doesn't happen first. And an interesting development is that now Century is over a year past its IPO. Southwest Gas can file a Form S-3.
And that helps how?
It could potentially register their remaining Century shares and maybe speed up the sale process, make it a bit more efficient.
So flexibility is key there. How does this tie into their financing plans for this year?
Well, their 2025 financing plan kind of reflects this uncertainty. They're looking at extending an existing $550 million term loan. And they might issue a small amount of new equity, maybe less than $100 million under their ATM program. But they said that could potentially be avoided altogether, depending on how and when the Century separation actually happens.
Right, so they're keeping options open, trying to manage the balance sheet through this potential separation. Let's dive back into the core utility financials now. You mentioned the operating margin increased. What really drove that?
Yeah, the utility operating margin had a good bump, up $38.9 million year over year. The biggest piece was that rate relief we talked about that contributed about $27 million.
Okay.
And then customer growth added another $5 million. That ties back to the roughly 40,000 new meters they added in the last 12 months.
So real fundamental growth driving things too.
Definitely. Shows the strength in their service areas.
And on the cost side, O&M was down slightly.
That's right, down about $1.5 million, mainly from spending less on contractors and professional services, although it was partly offset by higher insurance costs. Their goal, they said, is to keep O&M pretty much flat on a per-customer basis going forward.
Makes sense. But other costs went up.
Depreciation and amortization did, yeah, up nearly $10 million. But that's expected when you're investing in your infrastructure. The average gas plant in service grew by about 7%.
Okay, standard stuff with growth. What about other income and interest expense? Those can swing things around.
Yeah, other income actually decreased by about $8.8 million. That was mainly due to changes in the value of some insurance policies they hold, COHE policies, and also lower interest income from regulatory balances.
Okay. And interest usually goes up with debt, right?
Interest expense to the utility did increase, yeah, by $8.2 million. The main driver there was actually interest related to that over-collected PGA balance in Nevada they're planning to refund.
Ah, the purchase gas adjustment. Okay, so that makes sense. So putting all these pieces together, the rate relief, the growth, the costs, what did the utilities net income look like for Q1?
When you net it all out, utility net income was up just over $7 million compared to Q1 last year. That's about a 5.2% increase.
Okay, 5.2%.
Although, if you strip out the impact of those COHE insurance items, the underlying improvement was actually stronger, closer to 9.4% year over year.
Right, so solid underlying performance. Now, looking ahead, future growth. They mentioned strong economic activity where they operate. How's that showing up?
It's showing up very directly in customer growth. Like we said, those 40,000 new meter sets in the last year. The economies in Arizona and Nevada particularly are growing faster than the national average. And Southwest Gas is capturing a huge chunk of new construction. They said over 90% of new builds connect to their system.
Over 90%, wow. That's market dominance.
Pretty much. And all this growth means they absolutely need to keep investing in the system, both for the new customers and just keeping everything safe and reliable for everyone else.
And they have some pretty big investment plans lined up, don't they?
They do. They're talking about investing approximately $4.3 billion over the next 5 years.
$4.3 billion. Where's that money going?
A big chunk, about half, is earmarked for safety and reliability.
Makes sense. Right.
Then about 30% is aimed at supporting economic development, connecting new businesses, that sort of thing.
And this investment feeds back into their earnings potential.
Exactly. This level of investment is projected to drive a compound annual growth rate in their rate base, a key metric for utilities of somewhere between 6% and 8%.
8% rate base growth. Okay.
And they also pointed specifically to growth drivers like Arizona's booming advanced manufacturing sector and potentially a lot of data center growth in both Arizona and Nevada. That all means more demand for natural gas.
Interesting. So much so that regulators are looking into it.
Yeah, the Arizona Corporation Commission actually opened a specific docket just to look at natural gas infrastructure and storage adequacy because of this expected demand growth.
Okay, so they're clearly investing to meet demand. What about the balance sheet to support all this and their dividend policy?
They emphasized a strong balance sheet position. So they have the financial flexibility for these capital plans. Net debt levels are apparently pretty much in line with the end of 2024. And they hit their previous target of getting their FFO to debt ratio over 14% on a trailing 12-month basis for the holding company. So aiming for a solid investment grade profile.
And the dividend, still committed.
Yes, committed to paying a competitive dividend. The planned payouts for 2025 should result in a competitive payout ratio, they said. But they did add that the dividend policy will get another look after the Century separation is completed. Which makes sense. Things will change then.
Right. Makes total sense. Okay, so if you're listening and trying to synthesize all this, what are the main takeaways from this Southwest Gas earnings call?
Okay, key takeaways. 1, the reaffirmed guidance provides some predictability, which investors like. 2, those positive regulatory outcomes, especially in Arizona and Great Basin, definitely reduce uncertainty and should support future earnings. That's a big positive.
Right.
3, the ongoing commitment to separating Century is still there. The new potential to use a Form S-3 filing adds flexibility, maybe speed, but the timing and structure are still the big unknowns. That's a potential catalyst, but uncertain.
Definitely one to watch.
4, that robust customer growth is real, driven by strong regional economies. It shows continued demand for their basic service. 5, the significant capital investment plan, that $4.3 billion, highlights the opportunity for rate-based growth, which is how utilities generally grow earnings over the long term.
And the focus of that spending.
A lot on safety and reliability, which regulators like and which ensures long-term operational stability. Plus, watching those legislative efforts in Nevada for things like formula rates could signal a more predictable regulatory environment there eventually.
Interesting point on Nevada. Anything else?
Oh, and that Great Basin open season for potential system expansion in 2028. It signals potentially significant future investment, though they didn't give specific numbers yet. Something else to keep an eye on down the road.
Okay, a lot happening there. Now let's transition to our favorite segment. Time to put on our speculative hats. Remember, everyone, this is absolutely not financial advice, just some creative thinking based on the call. What's your outrageous but plausible trade idea this time around?
Okay, here's one for you. Southwest Gas specifically mentioned they're accelerating the refund of about $240 million in Nevada. That's from an overcollected PGA balance.
Right, the gas cost adjustment. They want to get that money back to customers by July 2025.
Exactly. So $240 million flowing back into Nevada consumers' pockets relatively soon. My outrageous but plausible idea is this. Consider a very short-term long position in regional banks with a strong retail presence in Nevada.
Banks? Why banks?
The thinking is, this sudden cash influx for consumers might lead to a temporary bump in deposits. Maybe people put some of it aside. Maybe it slightly boosts spending, which indirectly helps local businesses who bank there. Maybe even a tiny uptick in small loan demand, and people feel a bit more comfortable.
A second order effect.
Precisely. It's tactical, it's short-term, tied directly to this specific refund event. You need to assume consumers actually deploy this cash quickly and locally, and that it's significant enough to move the needle even slightly for regional banks. It's definitely speculative, right?
Absolutely, but it connects directly to that $240 million refund number. Plausibly outrageous. I like it.
That's the goal.
All right, that wraps up our deep dive into the Southwest Gas Holdings earnings call. We've hit the key results, strategy updates, regulatory news, and even explored a speculative trade idea. Remember, that idea is purely for discussion, definitely not financial advice. Please always do your own thorough research before making any investment decisions. What are your thoughts on Southwest Gas's path forward? How do you see that century separation playing out? We'd love for you to continue the conversation. Thanks for tuning in to TalkTickers.